Hi, everyone. Today, I want to introduce the balance sheet feature of this project. This shows the initial state of an account. Today, we'll mainly demonstrate some deposits, withdrawals, and transactions. Let's take a look at the changes in each account and the debit and credit entries for each operation, and we'll verify them together. So why do we need this balance sheet feature? There are several main reasons. The first reason is that the exchange is a financial system, a financial product system. It involves a wide range of operations, and users' assets might include USDT and various cryptocurrencies in spot trading. Then there are contracts, leverage, and some proxy accounts, copy trading accounts, etc. As for liabilities, users may have some debt accounts for margin trading. In terms of equity, there are realized profits and losses, accumulated fees, accumulated deposits and withdrawals, and various other accounts. Regarding cash flow, users have income and expenses. There are also various related accounts in these parts. So using the usual way to display these accounts is not very intuitive. Using a balance sheet would be a better way. The second benefit is that the balance sheet can help clients assess whether the relationships between accounts are reasonable. For instance, the total assets should equal the sum of liabilities and equity accounts. And then the change in assets over a certain period should equal the net of income and expenses during that time, reflecting the change in assets over that period. This is the first reason. The balance sheet offers some structural advantages. The second reason is that if clients want to perform certain operations, like if users want to know their income or net income for a specific period this year, using traditional methods is not very convenient. Traditionally, they may have various cryptocurrencies and spot trading along with contracts and leverage, and they have to check each one to find out how much they earned. But with cash flow statistics, they only need to first look at a snapshot of all their income for April. Then check the snapshot of all accounts for July. Then subtract the balances to determine the net income across various accounts. This makes tracking income and expenses much more convenient. The third part is about debit and credit entries. Previously, we could only see, for example, when entering a specific account, you would only see the historical changes of that account. But with debit and credit entries, we can now see historical entries, such as a change called fees. By examining its debit and credit entries, we can see which accounts it affects, and understand that this fee not only decreases the user's spot assets, but also increases the accumulated fees in the equity part. The expenses section will also increase by the amount of the fee. Additionally, on the platform side, both the hot wallet and equity sections will increase due to the fee. For instance, the hot wallet increases and the equity section reflects the increased fee income, while the income section also sees an increase in fee income. So following these accounting principles for the asset system provides many benefits in terms of operation, final cash flow, and long-term maintenance reliability. Because they have many structural relationships, we can quickly identify potential problems. Second, pinpoint exactly where the issue is. For example, let's take the fee we mentioned earlier. If the spot asset deducts the fee, there must be another fee account that also adds the fee. Then we just need to check that entry. If the subtracted and added amounts don't sum up to zero, we know that one of the accounts either deducted too little or added too much. If the assets and liabilities equity are unbalanced, meaning assets do not equal the sum of liabilities and equity, we can determine that there is an issue with one of the accounts. About the income and expenses, after deducting business expenses, if there's a gradual change in assets, it indicates that there's an issue somewhere. There might be other accounting techniques I'm not aware of, but by strictly following accounting principles, the accounting team can use their experience and skills to identify potential system issues. Now, I'll perform some inbound and outbound transactions, and we'll look at the changes in accounts and debit credit entries. I'm depositing 10,000 now. From a user perspective, they can see, okay, they've deposited 10,000. And this deposit of 10,000 indeed increases their spot assets. From the platform's perspective, it can be seen that the platform now has a hot wallet containing 10,000. How did this 10,000 come about? It's from the user's deposit. It's recorded as a liability. They owe the user 10,000. This is a potential liability because users can withdraw at any time, and when they do, the platform must repay this liability. Okay, now I'm going to place an order for a 10 EBTC contract. Order placed successfully, okay. We can see that no other accounts have changed. Only the spot account has had its balance unchanged, but 3.005 has been frozen from the available amount to the reserved balance. And if we look into it, since this is just a simple freeze, it doesn't affect the balance, so I handled it accordingly. This helps to inform them during audits that this does not affect the balance. Okay. Then we can see that his transaction record is also balanced in credit and debit. It's 3 and 3 with credit and debit at 0.005. And this 0.005 is the advance collection of fees. And this 3 is the advance collection of margin. Then the credit and debit is deducted from what's available and moved to his balance, the reserve balance. Then in the transaction record, we click into the debit credit entries to take a look. For example, if we click on this, we can see it in the debit credit entries. It's paired as well. This is it. The advance margin is also balanced in the debit and credit entries. Then click on fees and the advance fee collection. The advance fee collection is also balanced, so there's no issue. Now I'll open another window and use another account to complete the order I just placed. This is another account. Okay, place chunk shell. We can see that the reserved balance has been used up, 3 moved to the main warehouse margin, and 0.002 moved to the transaction fee. And then this amount plus 3 and 0.002 equals the initial 10,000. And the fee section also records the recent 0.002. Then we look at the exchange's balance sheet. Our transaction fee revenue is 0.007, as there are both buyers and sellers, with 0.002 collected here and 0.005 collected from the counterpart, totaling this amount. Then the fees collected also amount to this sum. Regarding the liabilities, previously we owed 2 users 10,000 each, and after deducting 0.007, now only owe the users 19,999.993 yuan. So the change in fees has been successfully reflected in all accounts. Now let's look at the debit credit entries section. Now we click into the spot assets and you can see these additional items are margin settlements, fee refunds and fees, these reference types. Let's click into each one and look at the debit credit entries. Let's first look at the margin settlement section. This caused the spot section to deduct 3 units. So where did these 3 units go? Let's look at the debit and credit entries. Or we can see their relationship. These 3 units went to the main warehouse margin. Moreover, the two sides are balanced, adding up to 0. Yes, because green means increase and red means decrease. Adding both sides equals 0, indicating debit and credit balance. So there's no problem. Okay, this is the margin settlement. Next, let's look at the fee refund. The fee refund is because when we place an order, the fee is charged at the highest rate. If after the transaction it is a maker, the actual fee charged will be lower and the difference will be refunded. Earlier, we pre-collected 0.005. The actual fee is 0.002, so 0.003 was refunded. All right, let's take a look at the journal entries. No issues here. The frozen funds in the spot account were released back to available balance. So the debits and credits are balanced. And because it's only a freezing operation, it doesn't affect the balance, so it's a reversal. So there is no issue here either. Then let's look at the fee section. Click on its debit and credit entries to see the specific impacts. Okay, we can see this more clearly with more accounts affected. Regarding fees, you can see after deducting the fee from the spot section, the fee equity also added the accumulated fee, which was correctly tallied in the statistics. And at the exchange side, the fee revenue was correctly recorded into the platform's income. Then the user's deposit liabilities have indeed decreased. And regarding income and expenditure, the user's fee expenses were accurately tallied, and the platform's fee revenue cash flow was also included. All entries are balanced, so this guarantees the correctness of the accounting records for this transaction. Okay, then there are other transactions such as closing positions, flip, and incidents after flip, etc. The settlement situations won't be demonstrated one by one. I have verified them all. You can try operating it yourself, try this project and check the changes in accounts and their corresponding journal entries. Let me demonstrate another feature here, which is the instant historical snapshot of the balance sheet. Click here for the historical snapshot function. Once you click in, it will show you all the queryable time points from now back to the past. After selecting, you can check the account status at that time by pressing the rate of loss. For instance, the clearest example would be checking the earliest record. Back then, I only deposited 10,000 units, and that deposit triggered the account initialization. So when I check further, the spot assets should have a balance of 10,000, and other account balances should be 0. Then the platform should have a hot wallet of 10,000, and equity should also be 10,000. Okay, let's check. Okay, that's basically how this function works. When we click in, the account details will also revert to the historical state. Then when you click into the assets and liabilities, all the journal entries will display the state at that specific time point. Okay, finally look at the code section in the Exchange account under this project, and within domain, select domain service, you will find it. All the core logic for account changes within the service is here. Its logic is actually very simple. Each method involves reading the accounts, extracting these accounts. After extracting the user's main warehouse margin, spot account, fee account, and platform account, apply them one by one. Apply the amount changes to these accounts one by one. And because I use DDD encapsulation, after the amount changes, you can obtain the changed accounts and debit and credit entries. And finally, just update your account table and add the entries to your journal ledger. And that's all you need to do. In practice, it is similar to the usual method since it's already encapsulated. So there's no difference. You just need to understand the input parameters, like the first one, how to fill in credit and debit. The other parts are just like before, you just fill in the account ID, reference type, and sequence. Everything else is the same, only this part needs attention on how to fill it out. So in terms of maintenance and implementation, actually, it's just like before, there have been no changes at all. The maintenance costs are exactly the same.